On the show today, we review the NGX in 2025 as well as markets across the world. We are going to be analyzing some of the events that have dictated happenings in the market this year. The NGX is off to its slowest start since 2021, with less than 19 days to the end of the first quarter of the year, to the end of Q1 2025. The market has appreciated by 3.15% year to date. That is as of March 11 yesterday. For most of March, it has been a bearish run as investors have not been enthused by some of the earnings results that have been released. Welcome to Economy and Market, where we give you a comprehensive breakdown of market and economic activities. I'm your host, David Olujimu. Let's get straight into it with a comprehensive market review. This year, the market has produced, that's the NGX, the Nigerian Exchange, produced a year-to-date return of 3.15% as of March 11, with the all-share index at 106,167.75 points. About a month ago, on February 13, we saw the market hit a new high with the all-share index at 109,172.04 points, almost hitting the 110,000 mark. I don't know how long we are going to wait to see the market hit that mark. Basically, what we are seeing in Q1 2025 is the slowest run of the market since 2021, when, as of the corresponding period that year, the market produced a negative return of -2%. That year, talking about 2021, throughout 2021, the NGX produced a year-to-date return of 6%. And of the 5 years where we had positive returns over, 2021 produced the smallest return, because in 2020 we had a return of about 45%. In 2022 it was about in the 30% region. Then in 2023 we had a return of 37%. Then in 2024 we had a return of 33%. So are we going to see the same event play out in 2025, considering the fact that we are seeing such a slow run of the market in the first quarter of the year? These are the questions that beg to be asked. Okay, coming into 2025, market analysts and watchers posited that the market will outperform 2024's return. Cardinal Stone, one of the Cardinal Stone Research, one of the firms that I have been watching, they projected that the market will grow as high as 40.4% in 2025. AfriInvest were rather modest in their expectations and projections. They projected a 24.3% return for the market. According to projections, investors were going to react to the effect of the flurry of corporate actions we saw in 2024. So last year we saw Seplat buy Mobil, we saw Owando buy Ajib, complete the acquisition of Ajib. We saw Enjoy Corp buy Champion Breweries. We saw Nigerian Breweries, International Breweries raise money through a right issues. Then we also saw a flurry of capital raises due to the banking recapitalization exercise. So we've been seeing we saw a lot of corporate actions in 2024. It was projected that this year we are going to see a boom in the market, as some people put it, like it was going to be a boom due to all of these actions coming together to roost, like chicken come together to roost. But where we are seeing coming into this year, as we slowly get to the end of Q1 2025, is that investors are not moving that way, especially due to the fact that the fundamentals are not tilting a lot. The fact is that the fundamentals that will drive investors' confidence in stocks are not showing that these companies are performing superlatively. So here is one thing about Nigeria. In the Nigerian Stock Exchange, you can have good results, but to drive the market, you need to have superlative results. So what we are saying is that earnings results are good, but they are not superlative. For example, we saw Dangote Cement post a net profit of 505 billion naira. However, it did not tilt the market. They are still going to pay 13 naira dividends, but it failed to tilt the market in the ways that we were expecting it to. So, and now one other thing that is also adding to the limiting the influence of, there's also limiting the actions of investors in the market, is the continued losses of multinationals. Multinationals from MTN to Unilever to a lot of these consumer goods companies have posted a lot of losses that have added to their accumulated losses and are scrapping the effect, are taking away dividends from the market. For many investors, there will be no dividends, especially if you have your liquidity in multinational companies. Apart from that, we now have a fixed income market that is sapping market liquidity fast and sharp. This year we have seen subscriptions to treasury bills hit 11.6 trillion naira. That's about 10 times the amount of trade value that we've seen on the NGX this year, or about that figure. So we've seen that the high yields on T-bills, the high yields on treasury bills, the high yields on OMO bills, open market operation bills issued by the CBN has been causing a lot of investors to focus more attention on the fixed income side of things rather than the stock market side of things. So basically, all of this gives a mental picture. The yields we are seeing the yields we see on our fixed income market is giving us a mental picture of where investors, both local and foreign, want to put their money. Although yields are coming down in the market, so we have been seeing yields consistently drop for all of 2025. They are still a catch for many investors, considering the stability of the naira this year. So we've seen yields at 21%. A 21% yield on a naira that is stable at 1,005 is a catch for investors. If you're going to invest $2,000 on or let's go higher and say institutional investors are probably going to put in $1 million on T-bills at 21% over the space of 1 year, 364 days. It's a catch because there is literally no riskless investment scheme. I don't know anywhere in the world that will give you that kind of return. So we've been seeing our fixed income market sap a lot of liquidity away from the equities market. We've not seen any revision of projections for what the NGX will do this year, except but if a significant action like what happened in 2024 can happen. Last year we saw the CBN came up with a recapitalization announcement towards the end on the 29th day of March, and that action literally slowed down the stock market in the ways that were not unimaginable. All of the banking stocks began to crash. So if we can see any such action, we may see a boom in our market. However, going by the way things are right now, it is highly unlikely that the NGX will outperform its 2024 figures. Now we'll take a look at some of the best and the worst performers in the market this year. So if you look, going by our screen, we'll see that the best performer we have in the market is Livestock Feed, one of the subsidiaries of UAC Group, one of the subsidiaries of UAC of Nigeria. Basically, Livestock Feed has been a consistent, profitable company, and last year they did not enter into the space of, they produced positive return in double digits, I think in the 40% region. But this year we see that, okay, investors are now beginning to be more comfortable with profitable companies. So we've seen the same thing when you see from Livestock Feed. But however, one stock here that is challenging that notion is Kellerams. Kellerams is a consistently not exciting company, but it is what it is. 113% year-to-date return this year. 113% just between January till February, because for all of March, Kellerams has not done any capital appreciation. Honeywell Flour Mills is another impressive performer we've seen in the market. Year-to-date return of 98.7%. One of the things driving Honeywell Flour Mills is that Honeywell Flour Mills has become the poster child for Flour Mills of Nigeria after the delisting of Flour Mills of Nigeria from the exchange this year. We've seen them with a 97.4, and they've stepped back into the region of profitability after that acquisition that was completed in 2023. After the acquisition of Honeywell Flour Mills by Flour Mills of Nigeria, they did not post any profit until last year, until H2 2025, until H1 2025. Then we see Square Nigeria 97.9%. It's another company that's posted a lot of profit. So one thing people do not know about Square Nigeria, which I would say on the show, is that Square Nigeria is owned by Masad Boulos. Masad Boulos is a Lebanese Nigerian, I think an American now. Basically, Masad Boulos is Donald Trump's envoy to the Middle East. Immediately there was an announcement of his position in that part. Immediately there was an announcement of his position on the Trump administration. A lot of people took position in Square Nigeria. So Square Nigeria is our fourth best performer. Then we have Africa Prudential. Africa Prudential is one of the companies owned by Hearst Holding, or famously Mr. Elumelu, that's Mr. Tony. Then UPDC has also performed excellently. Then another stock that, just like Honeywell, is another subsidiary of Flour Mills of Nigeria, Northern Nigeria Flour Mills, which has also performed quite exceptionally. Also, when you now flip the chart, now let's talk about some of the worst performers. Some of the worst performers in the market, they are indicative of the fact that investors are basically taking profit. When you look at some of the worst performers on the stock, they are some of the best performers of last year, of 2024. We start with Suno Assurances that has lost minus 54%. In 2024, Suno Assurances did an 800% return. So basically it means that investors went on that stock. They went on that stock, and in 2025, all they are saying is, I think there's no fundamental driving the returns on this particular stock. There's really no fundamental driving the return. So what they just went in to do, they came in and they're exiting. So for all of the gains that were achieved on Suno Assurances, we've seen it lose almost half of that value, because it's the same thing applies to Unicel Interlinked. Unicel Interlinked did a return of about 527% on the market, and this year we've seen them go, just between January till yesterday, minus 44%. The same thing applies to Royal Exchange, Guinea Insurance, Deep Capital. These are three financial service companies that did a lot in 2024. However, investors are taking profit as they should. We've seen that same trend is visible on Veritas Capital that has done negative 18.5%. Veritas Capital too went up about 500% last year, but however, investors are beginning to exit some of the positions. Despite all of the trades, when you observe the market, you discover that there is a bulk of trade the bulk of the trade in the market are on financial services stocks. Now let's look at some of the most actively traded stocks. These actively traded stocks were based on the average trading volume of these stocks between January till February. We see Access Holdings with an average trading volume of 44.4 million shares per day, followed by Universal Insurance with 23.4 million shares. They are followed by ICO, Zenith Bank, FBN Holdings, UBA, Fidelity Bank, Sterling Holding, GTCO, and Jais Bank. Of all 10 of the most actively traded stocks in the exchange, 8 are banking stocks. Then we have 2 which are insurance stocks. Basically, for these 8 that are banking stocks, Access Holding has successfully raised capital. Zenith Bank successfully raised capital, Fidelity successfully raised capital, Sterling Holdco raised capital, GTCO raised capital. Basically, they have all issued additional shares on the exchange. So one thing that we can also look out for is in the fact that there's improved liquidity for these stocks. And when you look at all of it, BusinessDay wrote a report stating that people who invested in these capital raises last year are primed to make a killing in the market because of the premium, because of the way the share prices, the market prices have done a premium on the offer prices of those additional shares. So we see that for a lot of investors, they are trying to, a lot of investors have been going all out with these particular stocks to make money, some to take profit, some also to position themselves for further capital appreciation. Another thing that we have to pay attention to is the fact that people are taking position on these shares, and for some of them, they have hit their all-time high in 2025. GTC hit its all-time high this year, the share price of 62 naira per share. We saw the same thing happen with Zenith Bank, hit an all-time high. All of these stocks have shown that the investors have confidence in these stocks. One, because of their successful capital raises. Also, because they have the potential to, they are potentially the most profitable companies listed on the exchange this year. Financial services industry has been a huge growth, has been a huge contributor to Nigeria's GDP growth, and the same thing we have seen in the market. Investors are taking positions on all of them. Okay. What we are going to see in the market going forward is that one important piece of information that we should not forget in the market is the rising tendency of global investors to stick with more experienced markets and more experienced traders. We've seen that. So let me explain why. From COVID period up to 2020, we saw massive government spending through monetary financing. Monetary financing in the term of there was a lot of money printing. That's the word. Not just in Nigeria. In fact, it is reported that 40% of all US dollar in existence were printed between 2020 and 2022. In Europe, there was a huge amount of euro printing, and we saw the same thing in Nigeria. And as monetary financing happened, this spending heavily reflected on stock market. But one thing is, as spending went up, inflation followed, and it triggered a cost of living crisis like never seen before in the 21st century. Between COVID period up to 2022, we saw inflation hit some levels. In the US, it hit a 50-year high as inflation went up to 6% in the US. And in Nigeria, we were not also exempt, as the report from the last administration showed that they had borrowed about 23.9 trillion in ways and means from the CBN, leading to inflation rates that were as high as that gave us inflation rates that were as high as what we've not seen since the 1990s. In fact, we had a 28-year high in last year. Basically, as monetary authorities started to try to curtail the effect of this inflation, there was a cutting down on public spending. Public spending regularly trickles into private capital. So we saw a cutting down on public spending, essentially meaning a cutting down on private capital. And for emerging markets such as ours, we'll be seeing it is not untoward, it is not strange, it is not out of pocket for us to see a drop in foreign portfolio participation, especially in our equities market. But basically, let's move on from our local market and let's take up some of the global stock market indices. We've been seeing a lot happening in the global stock market indices. We saw S&P. The S&P 500 is at minus 5.05% year to date. The Dow Jones Industrial Average, which is the index of the 30 most capitalized companies in America, is at minus 30. Nasdaq is at minus 9.57% down from the start of this year. Basically, some of the trends driving it, we see Donald Trump's tariff push has seen companies being wary of consumer spending being dropped down. We've seen a lot of American government curtailing on their public spending also under Donald Trump, and is greatly affecting their stock market. However, in Europe, we've been seeing the trend is quite opposite. FTSE 100 from the UK, from the London Stock Exchange, is at the 3.43% is year-to-date return. The DAX index, which is the index that tracks the Munich stock market, is at 13.17%. The CAC 40 index is at 8.63%. Euro Stocks 50 tracks the top 50 companies across Europe, 9.18% year-to-date, even outperforming the NGX. And in Africa, the South African Stock Exchange, we've seen the JSE All Share Index hit 3.56%. In India, it's a negative with minus 5.68%, as you can see on your screen. Thank you. That's all we can take for today. See you again next week. See you again on Friday. This is Economy and Markets on BusinessDay Television.